Ladies and gentlemen, I've been in the markets for a very long time, seen countless cycles, witnessed the ebb and flow of capital, the rise and fall of empires, and the perpetual human dance between fear and greed. And frankly, what I'm observing right now, especially concerning the geopolitical landscape, sends a shiver down my spine that echoes back to some of the most volatile periods in recent history. The air is thick with tension, a palpable unease that feels different, more pervasive, more threatening than what we've grown accustomed to. We are, undeniably, staring down a barrel of increasing instability, a kind of instability that history repeatedly tells us has profound and often immediate consequences for the value of real assets. Now let's cut straight to the chase, because time is of the essence when these seismic shifts begin to manifest. The drumbeat of conflict, specifically the escalating risk of war in the Middle East, centered around Iran, is growing louder by the day. And when I speak of this, I'm not talking about abstract geopolitical machinations happening in a distant land. I am talking about a very real, very present danger that has the potential to fundamentally reshape global economics, energy markets, and indeed the very fabric of our financial system. The critical question that immediately arises, one that I believe demands our absolute attention, is this. As these tensions reach a boiling point and the world scrambles for safety, will silver be the next asset to not just appreciate, but truly explode in value? Will it finally claim its rightful place as a premier store of wealth in a world teetering on the brink? To understand why this is not mere speculation, but a deeply rooted concern based on historical precedents and current macro indicators, we must first quickly contextualize the environment we find ourselves in. We are operating within a global financial system that is, to put it mildly, under immense strain. Decades of unprecedented monetary expansion, ballooning sovereign debt, persistent inflationary pressures eating away at purchasing power, and a declining faith in fiat currencies have already set the stage for a flight to tangible assets. Central banks globally are accumulating gold at record rates, signaling their own apprehension about the future of traditional financial instruments. This underlying fragility provides a fertile ground for any significant shock to trigger a cascade of unforeseen consequences, and a full-blown conflict in a region as strategically vital as the Middle East, particularly involving a major player like Iran, is precisely that kind of shock. The problem, or rather the escalating conflict, revolves around Iran and its increasingly precarious position on the world stage. We've seen a steady, almost relentless increase in provocations, counter-provocations, proxy conflicts, and saber-rattling across the region. From the Strait of Hormuz, a choke point for roughly a fifth of the world's oil supply, to the intricate web of alliances and rivalries playing out in Yemen, Syria, and Lebanon, the temperature is rising. There's the undeniable progression of Iran's nuclear program, a constant source of friction with Western powers and regional adversaries. There are the persistent threats to shipping, the drone attacks, the political assassinations, and the increasingly bold rhetoric from all sides. Each incident, each miscalculation pushes us closer to a critical threshold. The potential for a localized skirmish to spiral into a broader regional or even global confrontation is not just a theoretical possibility. It's a very real and present danger that responsible strategists must consider. The economic implications of such an event are staggering. An oil shock that would make past crises pale in comparison, an unprecedented disruption to global supply chains, and a massive shift in capital flows as investors seek shelter from the storm. Now you might be asking yourself, what does any of this grave geopolitical forecast, have to do specifically with silver? Why not gold, which is often seen as the ultimate safe haven? Why not oil itself, given the region's importance? These are crucial questions, and they lead us directly into the heart of the matter, into the open loops that demand closure. How does this specific conflict impact silver? What makes silver unique in this equation? What historical patterns are we seeing that point to silver's potential? The answers lie in silver's dual nature and its often underestimated role during times of profound economic and geopolitical stress. We need to dig deeper into its unique market dynamics and how they intersect with a world on the precipice. As I've observed over decades, When the geopolitical temperature heats up, when the foundations of trust in government and financial institutions begin to crack, people instinctively turn to tangible assets. This isn't a theory, it's human nature playing out repeatedly throughout history. And while gold certainly leads the charge as the quintessential monetary metal, silver often follows with even greater volatility, and crucially, greater percentage gains once it truly gets moving. This is due in part to its relatively smaller market cap. It's the poor man's gold, yes, but also a critical industrial metal. And this dual identity is its superpower. In a world gripped by fear, where the value of paper assets becomes questionable, the demand for anything real and universally recognized as value skyrockets. If you're finding this analysis insightful, make sure to hit that like button and subscribe to the channel. You don't want to miss what's coming next, because these insights are becoming more critical by the day. Let's think about silver's position right now, even before considering a major conflict. We are seeing unprecedented demand for silver in new technologies: solar panels, electric vehicles, 5G infrastructure, medical applications. These are not niche markets. These are multi-trillion-dollar industries that are growing exponentially, and silver is an irreplaceable component in many of them. Yet, the supply side of the equation is constrained. We're not finding massive new silver deposits, and existing mines are facing rising costs, stricter environmental regulations, and sometimes political instability in mining jurisdictions. This creates a fundamental supply-demand imbalance that is already a coiled spring. Add to this the broader macro environment of rampant currency debasement through endless quantitative easing and government spending, and you have a perfect storm. Even without an outright war, silver's fundamentals are incredibly strong. The geopolitical risk, however, acts as the ultimate catalyst, the ignition switch for what could be a truly explosive move. So when I look at the escalating tensions around Iran, combined with the structural shifts in the silver market, the surging industrial demand meeting constrained supply, and the underlying macroeconomic fragility, the question isn't if silver will move, but when and how explosively. A regional conflict, particularly one that disrupts global energy flows and throws the already shaky global economy into disarray, would send investors scrambling for safety in ways we haven't truly seen in generations. The immediate flight to safety would almost certainly benefit gold, but silver, with its significantly smaller market and higher volatility, has the potential to dramatically outperform. It's like a smaller boat in a turbulent sea. It gets tossed around more, but when the tide is rising rapidly, it also rises much faster. And if you haven't already, please subscribe. It helps us bring more crucial insights like these directly to you. The big reveal, the critical element that ties all of this together, is silver's profound monetary history. Forget for a moment its industrial applications. For millennia, alongside gold, silver was money. It was the medium of exchange, the store of value, the universal unit of account. In times of war, chaos, and societal upheaval, when trust in paper promises evaporates, people revert to what they instinctively understand as real value. They revert to precious metals. During such periods, the gold-to-silver ratio, which tracks how many ounces of silver it takes to buy 1 ounce of gold, tends to compress significantly. This means silver outperforms gold. Why? Because the perception of silver as poor man's gold shifts dramatically. It becomes essential money for the masses, not just for institutional investors. Its relative affordability compared to gold allows a broader base of investors to participate in the flight to safety, driving its price up at an accelerated pace. Moreover, its industrial demand provides a powerful floor for its price, meaning that even if the geopolitical tensions were to subside in the long run, its intrinsic value from industrial applications would prevent a catastrophic collapse. The current situation around Iran, therefore, doesn't just add a layer of geopolitical risk. It ignites the potential for silver to reclaim its monetary role in a very significant and profitable way for those who understand what's unfolding. The confluence of escalating global instability, deeply negative real interest rates, persistent inflation, and the imminent threat of a major regional conflict creates an unprecedented backdrop for silver to truly shine. So, the stage is set. We have an undeniable and escalating risk of war in a geopolitically critical region. We have a global financial system riddled with vulnerabilities. We have silver, an asset with both critical industrial demand and a deep historical monetary function, currently trading at a significant discount relative to its historical potential and its cousin, gold. The combination of these factors, in my experience, points to one very clear conclusion. Silver is poised for a significant revaluation, and a major geopolitical flashpoint could be the catalyst that ignites an explosive price move. Don't miss the next part, where we'll delve deeper into the specifics of how this could play out and what it truly means for your portfolio. Make sure you're subscribed and have notifications turned on. We stand at the precipice of a geopolitical earthquake, an event horizon that has been building for decades, and its tremors are about to shake the very foundations of our financial system. The escalating tensions in the Middle East, particularly the looming specter of conflict with Iran, are not merely regional squabbles. They are the fuse on a global powder keg. We discussed how gold has traditionally served as the ultimate safe haven, but I want to impress upon you today why silver, often overlooked, is not just a participant in this flight to safety, but poised to become the next, perhaps even more dramatic, explosion in value. Consider for a moment the sheer scale of potential disruption. An outright conflict with Iran would immediately send shockwaves through the global oil markets, far beyond anything we've witnessed recently. We're talking about a potential curtailment of Strait of Hormuz passage, the artery through which a significant portion of the world's oil supply flows. This isn't just a price hike, it's an economic paralysis. Businesses shuttering, supply chains seizing up, and an inflationary spiral that would make current concerns seem like a gentle breeze. When the world is scrambling for tangible assets, for real money, not just digits on a screen, where do you think smart capital will flow? This isn't merely about fear, it's about fundamental economics meeting geopolitical reality. The confluence of unprecedented global debt, central banks printing money at a rate that would make hyperinflationary regimes blush, and a political landscape teetering on the edge of major conflict creates an environment ripe for assets like silver to shine. The problem, the conflict at hand, is that the vast majority of investors remain dangerously unpositioned for such a scenario, still clinging to paper assets and conventional wisdom while the tectonic plates beneath them shift. They're missing the forest for the trees, failing to see how every element, from Iran to inflation, converges on the undervalued opportunity that is silver. Now let's open the loop further. What makes silver uniquely positioned? How does this industrial metal suddenly transform into a financial powerhouse? The answer lies in its dual nature and its historical role. Unlike gold, which is almost exclusively a monetary metal, silver serves as both a critical industrial commodity, essential for solar panels, electronics, medical devices, and a monetary metal, a store of value, and, historically, actual money. This dual demand profile creates a fascinating dynamic. In times of economic expansion, industrial demand pushes its price. But in times of crisis, like the one we face, its monetary qualities come to the fore, attracting safe haven capital. Imagine a scenario where the global economy is rocked by an oil shock. Inflationary pressures mount, confidence in fiat currencies wanes, and governments respond with even more monetary easing. What happens? Gold prices surge, as they always do in such times. But silver, with its much smaller market capitalization, its price suppressed for so long by financial engineering and paper contracts, suddenly finds itself in an entirely different league. The capital required to move the silver market significantly is a mere fraction of what's needed for gold. A relatively small influx of institutional money, let alone retail demand, can send its price spiraling upward with astonishing speed. If you are gleaning valuable insights from this discussion, please consider hitting the like button and subscribing to this channel. Your support helps us continue to deliver crucial analyses that cut through the noise. The supply side for silver is equally compelling. We're not finding new, massive deposits of silver. The grades of ore are declining, and much of the silver produced today is a byproduct of mining other metals like copper, lead, and zinc. This means that its supply is somewhat inelastic to its own price movements. A higher silver price doesn't automatically mean a huge surge in dedicated silver mining. Contrast this with ever-increasing industrial demand, particularly from the burgeoning green energy sector. Solar panels, electric vehicles, all require substantial amounts of silver. This structural deficit, where demand outstrips supply, has been building for years. Add to this a dramatic flight to safety triggered by geopolitical events, and you have the perfect recipe for a violent price explosion. Historically, the gold-silver ratio has provided a powerful indicator. For centuries, this ratio hovered around 15:1 or 16:1, reflecting the relative abundance of the two metals in the Earth's crust. Today, that ratio frequently sits at 81 or even higher. This historical anomaly screams undervaluation for silver. When fear takes hold and investors seek hard assets, gold is often the first port of call. But as gold's price rises, discerning investors and institutions looking for leverage to the monetary metals trade will inevitably pivot to silver, recognizing its profound undervaluation. They will see that buying silver at 80 times the price of gold, when historically it's been 15 times, is an arbitrage opportunity waiting to happen. The gold-silver ratio will compress dramatically, and this compression will largely be driven by a surging silver price. Let me re-engage you with the core question. Why silver now? Because the confluence of factors is unprecedented. We have the geopolitical trigger with Iran, threatening global stability and currency integrity. We have the monetary backdrop of inflation and debasement. We have a physical market for silver that is already in deficit, with declining above-ground stockpiles. And, crucially, we have a market that is fundamentally undervalued relative to its monetary peer, gold, and its historical average. This isn't just a speculative bet, it's a structural imbalance poised for correction. The climax of this narrative, the big reveal, is that the explosion in silver won't just be a modest price increase. It will be a monumental re-rating of its fundamental value, driven by a sudden, overwhelming recognition of its scarcity and its monetary importance. When conflict escalates in the Persian Gulf, oil prices will skyrocket, inflation will surge, and the global financial system will once again face existential questions about the integrity of fiat currencies. In that environment, the search for real assets, for enduring stores of value, will intensify beyond anything we've seen in recent memory. Gold will perform admirably, no doubt. But silver, with its smaller market, its immense industrial demand profile, and its profound undervaluation relative to gold, will experience a supercharged rally. The capital flows that will exit traditional financial instruments, government bonds, and even equities searching for safety will find gold. But a significant portion of that capital, seeking greater leverage to the monetary metals trend, will inevitably discover silver. This influx, coupled with an already strained physical supply, will create a supply squeeze unlike any seen before. The gold-silver ratio will not just compress, it will collapse towards its historical average, meaning silver's percentage gains will dwarf gold's. This isn't a prediction of an incremental shift, it's a forecast of a paradigm change in how silver is perceived and valued by the global market. The open loops close here. The specific market mechanics are a combination of flight to safety, supply-demand imbalance, and a historical undervaluation that can no longer be sustained in a world desperate for tangible wealth. So, what is the conclusion? Silver is not just a participant in the coming flight to safety, it is the asymmetric opportunity. It is the metal uniquely positioned to benefit from escalating geopolitical risks, ongoing currency debasement, and a fundamental supply-demand imbalance. The risk of war in Iran, while horrifying in human terms, will be a stark reminder to the world that tangible assets, real money, are paramount. And when that realization hits, silver will be the next to explode. Don't just observe this unfolding scenario, prepare for it. Secure your position in physical silver. This is not the time for complacency. It is the time for decisive action to protect and grow your wealth. If you found this analysis compelling and you're ready to take charge of your financial future, please ensure you've subscribed to our channel and shared this video. Your engagement helps us reach more people who need to hear this message. And remember, stay vigilant, stay informed, And most importantly, stay positioned.